Very good morning, everyone. Welcome to Admiral Markets and our live trading room today on the 5th of November. We got a new month ahead of us, so looking forward to that. We got a week of some news announcements, as always, in the first week, but we'll take a look at that in just a second. As always, the risk disclaimer explaining that trading for exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we thank you for your attention on that one. My name is Chris, by the way. We're going to take a look at moving average trading. So we're going to take a look at moving averages, which moving averages I use, which moving averages maybe others use, and see how we can trade with those. Right? What kind of decisions can we make and entries and all of that. For example, establishing trend bias, that will be pretty easy with the moving average. Identifying opportunities, looking maybe for filters, and then the actual entry. All right, so that will start in five minutes or so, a few minutes, because Michal has good, interesting information to share with you. Good morning, Michal.
Good morning, Chris. Good morning, everybody. Thank you very much for tuning in for our webinar session this morning. My name is Michael Onachov, and I'm a Client Relationship Manager for Admiral Markets. In essence, my job is to create the best possible environment for you. Here is my email, my Skype, my LinkedIn, and also a direct email to Trading Camp at admiralmarkets.com. I'm one of the head counselors, so if you want to ask some questions about our educational programs, you're free to do so on camp@admiralmarkets.com. Today, we're going to have another episode of Fun with Forex. Actually, today is the second part of the episode on most valuable companies in the world. Yesterday we had part 1. Today we're going to have a very interesting part 2. Since we have a lot of new faces listening to us today that were not here yesterday, I'll give you a quick overview of what we've talked about yesterday. Yesterday, the biggest question I had was, what is the biggest market capitalization company in the world? The biggest company by market capitalization. And most of our viewers were absolutely 100% correct. It was, in fact, Apple. The second question we went over yesterday was the biggest brand in the world. And the people who decided to stick with their choice of Apple were correct again. Apple overtook Coca-Cola in 2013 in the competition for the most valuable brand of the world. Right now, Apple is number 1. And Google is number 2. Coca-Cola, that used to be the most expensive brand in the world, is now in the top 10. So we've spoken about the biggest companies all around the world, such as Apple, Coca-Cola, General Electric, Exxon, Google, and Walmart. All those companies are huge in terms of their brand value and market capitalization. And all those companies had one very interesting thing in common. Once again, most of our viewers were correct. This fact was all of them are available in the CFD section of Admiral Standard. So the question I asked my viewers yesterday was the following. What do you think is the most valuable company in history adjusted to inflation? And why is this company not represented on our Admiral Standard CFD? So a lot of people send me their emails with their guesses. What was the biggest company and why it's not represented on our CFD. So to those of you who were correct, I applaud you standing up. The most valuable company in history adjusted for inflation is the Dutch East India Company that was established in 1637. In 1637 it was the most expensive. It was established in 1602. And it was the world's first publicly traded company on the world's first stock exchange, which started off as a spice trader. Its competitive edge, it was the largest fleet shipping goods between Europe and Asia. And in the 17th century, it grew tremendously thanks to rampant speculation on the value of tulip bulbs. Actually, we've spoken about tulip bulbs last week, and we've established that at that time, acres and acres of land were traded for one tulip bulb. And as craftsman had actually saved his wages for 10 years in order to buy himself one tulip bulb. Tulip bulbs were what bitcoins are today, a hugely inflated speculation instrument. The so-called tulip mania craze foreshadowed the internet.com bubble, and like its modern equivalent, it eventually burst, but not before making the company the most valuable company in the world history. Its estimated price then was 78 million Dutch guilders. Adjusted to 2012 dollars inflation, it would have cost $7.5 trillion. What happened? Well, tulip mania crashed in 1637. The company went back to its spice trading roots and it ceased operations in 1800. So today's value of the Dutch East India Company is nil. That's why it's not on our Admiral Standard CFD. It does no longer exist. To those of you who are correct, well done. You have scored some very good points in my book. If you want to send me some more interesting stories, you can always do so at omo@admiralmarkets.com. And if you want to learn a lot more about history, a lot more about trading currencies and CFDs, you can always enter our 3-week educational program called Trading Camp. All you have to do is send us an email at camp@admiralmarkets.com. If you get into this program, you'll get a 3-week theoretical course and a 1-week practical course on how to trade on Forex exchange. You will receive everyday assignments, strategies by professional traders, performance tracking, personal coaching, and free literature is going to be supplied as well. Requirements for entry? Well, they're quite liberal. All you have to do is send us an essay on your Forex aim, about 100-200 words, not more than that, and you have to open a real account with a minimum deposit. It can be as low as $10 in some countries and as low as $200 in some other countries. It all depends on the region you live in. Either way, send us an email at camp@admiralmarkets.com and I'll be very happy to help you. Once again, it's been a pleasure talking to all of you today. My name is Mikhail Onokhov. I will now pass the floor back to Chris, who will continue with his live trading session. Thank you very much, guys. Have a nice day. And right now, I'm being told that Chris decided to take a small break, and therefore I'll continue and I'll present you something interesting in terms of motivational speaking. How about today we also speak about something that is very important to all of the traders. Let's speak about the stuff that makes you successful, and then Chris will come and he will continue. I see that the amount of participants for this particular webinar has grown, and we do have people who attend these webinars on a constant basis, and we do have some new faces here as well. It is very pleasant to see that. It is great to see that a lot of our traders do not stop and carry on with their education, trying to make tomorrow more profitable than today. When you work for a financial company like I do, you get to meet a lot of different people who are interested in finance. You meet traders who have been trading for years. You meet people who are just making their first steps in the market. You get acquainted with successful traders, and you also get acquainted to people whose profits are not as high as they could have been. I have always wondered what separates a successful trader from the rest. If you analyze the field, you'll reach a conclusion that a great stable result is not only down to the strategy implemented, or is not even down to your intellectual capabilities. Both of those factors are important, but there is something else that should be considered. After all, the things we learn to trade Forex, the concepts we study are difficult, but the concepts are not impossible to understand, and I'm sure that every single one of our traders could have seriously improved their overall trading results if they tried hard enough. I'm also convinced that a lot of our traders must go beyond learning about a variety of trading techniques and should also approach their trading from the motivational and psychological side. It is fairly simple to measure your success in trading. If you're profitable on a constant basis, you are a success. If you make losses, you're not so successful. Angela Lee Duckworth, a very interesting scientist, has conducted research in the US. She studied people in challenging work environments And the aim of the study was to determine who was successful and why were they successful. She studied teachers, army personnel, and salespeople at multinational corporations. And at the end, one key characteristic emerged. And it was not IQ, it was not good looks, it was not good health, it was something different. It was grit. Grit or passion or perseverance is your stamina towards your long-term goals. Grit is your ability to stick with your future day in and day out. Not for a day, not for a year, but for a long, long time. It's living a life like it's a marathon, not a sprint. To me, the most interesting thing about grit is how little we know about it and how little we try to learn it. How to get ourselves motivated and have the strength to follow through with our commitments day in and day out. The answer to this very interesting question, well, no one knows the answer. It's unknown. So far, the best idea is being developed by Stanford University. It shows that your ability to learn and analyze, and that is pretty much what Forex is all about, is not constant. It changes with your efforts. And more you try, more things you do to get better. For example, trading, greedier you become. So more you learn, more you try to trade, better you will eventually become. You become a person who's a lot more likely to persevere even if he fails. So I wanted to let you know that failure in something, and it can be anything from Forex trading to actual life, is not down to your intellectual capabilities. It's your lack of grit that matters. When you choose something as a goal, as your aim, you have to put continuous efforts into achieving it. For all of us here, we use Forex as a path to a better life. We want Forex to be a source of extra income at first, and possibly maybe in the future a path to total financial independence. And that is a great future we have imagined. Many of us will fail, but we fail not because of the economy, not because of the broker, not even because we were not smart enough. We fail because we do not have the grit to follow through on the dream every day, year after year. Now, this is why I spoke about people who attend the webinar on a constant basis. My God, you're getting there. Keep learning. Keep doing things better than you would have done them yesterday. Success and everything that comes along with it is reachable. All you have to do is work towards it every day for years and years. Do not give up. This is something that I want you to take away from this presentation, and I want you to implement this spirit, this grit, this bulldog approach in your everyday trading abilities. I hope that Chris is online again, and I will now gladly pass the floor to Chris, who will carry on with his webinar. Chris?
Very good morning, everyone. I'm back. Thank you, Michal, for that lovely explanation about the companies and also the motivational part. Always very interesting. We're going to take a look at the calendar effect just quickly to see if there's anything today going on, and maybe this week. I think we have euro and pound interest rate on Thursday, and then the NFP announcement on Friday. Today we had an odd interest rate announcement effect. That was earlier, and later today we have services PMI on the pound and some euro news as always, and then the dollar. Some medium tag news there already. Monetary policy meeting minutes, that could be important for the yen. Alrighty, as promised, we're going to take a look at moving averages today. So for those of you who don't know, but I use basically the 34 EMA primarily. Now there's a lot of different combinations that people could use, but I like the 34 because it's a fib number, and I like to use fib numbers for my moving averages. Others I sometimes use for shorter term moving averages are 13 or 8. They're all EMA, all right? And 144 or even 89 for the pound dollar. So I specifically have on this chart the 34 EMA open, the close, high and low, excuse me, high, low, and close, 34 EMA, and then I also have the 144 EMA close and the 169 EMA close. Okay. Other combinations that I use are sometimes 3 EMA shift 1 and 3 EMA shift 3. Shift means that you put them in forward. So those are most of you already know that, but just in case that you're new in here maybe, I want to share that with you. Other combinations that are possible that other traders use are often 9 and 18, 9, 18, 36, 20 and 40, let's see, 5, 10 and 20, 50, 100, 200. Let's see, anything else? Well, probably a ton of combinations, but those are my important ones, though. Alrighty, let's start cracking. Just before I do that, though, and actually dive into the charts, I do want to show you where you can register for new webinars this week. Go to admiralmarkets.com, click on education, go to webinars, and then you can sign up by clicking on the blue button here for trendline trading tomorrow and intraday trading on Thursday and some of the educational webinars with Tarantala and myself already. Good. So let's start with the euro dollar. And the 1 hour you can see just totally crashed. Now, I was a bit bearish definitely here for some downside, but I didn't expect such a thrust. So shows to prove, of course, that not always can we predict what the kind of move will we get, a correction or an impulse. I was definitely bearish here. As you know, I said this is a good sell, and this was a good buy, this was a good sell, but I expected a bounce somewhere in here and here. But that the first one definitely didn't happen. The second one hardly. It maybe now actually kind of crashed through it and is now making a correction. So not really. So that was a very impulsive move down. You can look at the band here, how strong what kind of angle it has. So yesterday this would have been maybe a good sell already here. In fact, right in the band with such a strong downside. I sold the Aussie, but the euro would have been just as good. And we're moving down from the band as we speak. Now we could push up still a bit, potentially. That doesn't have to be though. Max I would expect it is until 135.50 before we get that downside. Maybe even 133, 135.30. Anywhere in here, we should see continuation to the downside for at least one more bearish move down. It doesn't even have to go up that high. We can move down as we speak because we can just see continuation and continuation like this till we break this bottom. When we break that bottom, then we have divergence and we could see maybe a bigger correction up again. All right. For the moment, though, this bottom break is very likely. So let's take a look at the 15-minute world. And this morning there was a good sell right in here. In fact, a breakout trade. Breakout because we not only reached the 1 hour band, but on the 50-minute world we're breaking out a 50-minute band. Okay, so that already happened. That was around 135.04 and a stop loss just above at 27, about 23 pips. Would have been up 14 by now. That was a good trade. So that's the idea, what we're going to look at for other currencies as well, but that's quickly the euro dollar. Basically already it got the bounce right in here. So we're looking for either the bounce itself or the first breakout. Let's take a look at the pound. If it were to maybe travel up a bit, I don't think it's likely now anymore looking at the 50-minute world, but then it would still be interesting. Let's take a look at the pound dollar. The pound also, just like the euro, very nice downside angle. Very nice. Good downtrend. And we're approaching the bottom, in fact, of a monthly low last month and a daily weekly support. So that's something to be aware that could provide support. And you can see that the band is here totally flat. If we take away the fib for a second, you can see now we're totally flat. But not only that, the move up towards the band was very aggressive. That's the main difference compared to these moves where, you know, they have a correction like this towards the band. This one had one move toward the band, not three moves. So the likelihood of these being corrections were high. And in fact, for those of you who remember, I advised, or I took a short, let me say it this way at least, at 160.68. So anyone who followed me, we got that trade right to the pip because it was really to the T. It didn't go 1/10 of a pip higher than that, in fact. And I caught 80 pips and took it right in here. I actually fell lower, right? It was a 5-to-1 R2R trade anyhow, but could have been even 10-to-1, even, well, it doesn't matter what it could have been, but it was a 5-to-1 trade. So that was a great trade. Did anyone take that one, any chance? That was cool, wasn't it? 160.68, stop loss 160.83, 15 pips stop loss. I've got that crash. Right in here. For those of you who are multitasking, I'll show it, otherwise you might miss it. And the idea was the correction like that, finishing at the target with resistance here, of course. No one's writing anything. Doesn't matter. For me, it was good. 5-to-1 trade. Anyhow, that's the difference between this up move here and this up move here. Right? We can see that that up move is a lot more thrust than the one we were selling, or I was selling here. So that's the big difference. Therefore, because of that, I'm not so bearish on the pound as the euro. Let's take a look again at the euro. It's very important to look at these angles of the moving averages, and also looking at how the currency is moving to those moving averages. Those would be the biggest tips. So if you follow along today to look at me and how I interpret those angles, I think it will help, give some help at least, if you want to trade this way. And here too, though, there was, I have to admit, there was some upside to this band. So I was actually waiting for the -272 to hit, but it missed it by, the euro missed it by 8 pips here. Dropping pretty fast as we speak, but that trade is unfortunately behind us. Anyhow, let me get rid of that. So definitely pound at a resistance, but I wouldn't be surprised if it could make a potential to go to these targets first. If it does, those would be good resistance spots. I would put my stop loss just above here, above this support and resistance at 160.40. Don't have to go higher than that. And sell at 160.20 and 159.96. If it does get there. Let's see. We did bounce off the 50 fib here. So to me, the likelihood of that, is too big to say I'm very interested in selling here. You can also look at the moving averages. They're flat. Let's take a look at the 15. Maybe a break below here could still be some pips, but I would be very leery of it. I would say then in that case we'd have to target the 618 fib, because that could be the bouncing spot to those targets. Now primarily I'm interested in selling it from those targets, because those are the bigger trades. That's the most R2R you can get, I think. So I'm not that interested in the upside, personally, based on my own trading. Alrighty, euro pound. Euro pound, as you can see, was a very good sell yesterday, and the only thing you have to do is take a look at these moving averages. Right? Look at the first move up here. Look at the first move up. It didn't even end in the band. Right? The pound up move went all the way above the band. That's the difference. This one, this up move stayed clear of the band. Therefore, any upside will have a high likelihood of facing rejection when it gets into the band. That's what it did. And got rejection as we speak. So we're looking for breakouts or moves back to the moving averages. So obviously this one doesn't have it at the moment. Let me zoom into the 50-minute world. Maybe a breakout here. Right? Because this is a 50-minute zone. You can see the moving averages, prices under moving average. The moving average is under the long-term moving average. So everything is well set for a breakout in a way. It's not a great angle. But still. Could have been a short, maybe it's hooking back as we speak, but I'm not a big fan of the Euro pound, so I'll gladly skip this one. Personally, I would rather look for something else. But let's take a look at the Aussie, and then I'll answer some questions. The Aussie has a band that's already pointed to the upside, but you can see also this upside here was pretty aggressive. All right. But then again, look at the bigger picture. I thought a sell at the 272 target, minus 618 with the stop loss just above it, was still a good idea. But this was just in fact, I was testing something, so I just took a small position here. But anyhow, it did work out. It's up. The target is lower though at 93.70. So let's see. The moment the 50-minute world is not ready yet for a breakout trade. It was maybe this morning here, right? Because the price was underneath the band. That was a good breakout trade with the stop loss here. We don't have that at the moment. So the band is now pointed to the downside. So let's see. There could be some follow through as we speak. Here, this is a typical case of where the band, is pointed to the upside, but we can see that the long-term directional is still down, right? Take a look at the long-term moving average. That's indicating that that upside is still a correction. Yes, the band is pointing to the upside, so we did have some upside as well, right? We did have some upside trading due to that, but it got rejected at the long-term moving average. I would only consider this really, really an uptrend when we have fractals above this long-term moving average. The opposite fractals, not this fractal, sorry. Let me explain that better. Not this fractal, but if we have downside fractals above it, right? I hope that everyone can follow along, but so not these fractals on top for downtrends, but the bottom fractals for downtrends, and the upper fractals for uptrends. Alrighty. This is looking bearish to me. We are back at the 1 hour band. I think we need a bit more structure in the 50-minute world. We need at least a fractal here, something like that, and then the next break right in here. The stop loss like that, that would be grand. Right? So I would rather wait for that at the moment. We'll have some ups and downs here first, and then probably break. All right, let me answer some questions here now. Quickly, let's see. Does Bitcoin have any function related to Forex? or is it just pure gamble? I don't know much about Bitcoin, so I really can't say. Maybe someone else in here knows. I mean, I've read a bit about it. Also know something from Michal about it, but other than that, never really read any, read extensively or a bit about it. To be honest, there was very, very bad Spanish data. Apparently, Moga is saying. Oh, sorry, Richard. Is there divergence? Which currency, Richard? And Arjan is asking if I can show how you build these EMA bands. Certainly, that's no problem at all. You go to Insert, go to Indicators, go to Trend, go to Moving Average, go to Parameters, then in Period, click 34 or 144 or 169. With the 34, click Exponential, apply to Close, High, and Low. So not at the same time, but of course, logically, 3 moving averages with Close, High, and Low. And the 144 and 169 are always closes. Now I should mention that this way of trading is, for me, together with fibs, really one of the most favorite way of trading, personally. Together with trend lines. Sometimes though the trend line doesn't fit exactly price, right? Price doesn't really, you can't put a trend line on that particular section of price. So when moving averages always give some information though. So for me, this is my favorite way of trading. So I should mention that, or I want to mention that. Let's go quickly back to the euro dollar. And Richard, is asking if there's divergence on which time frame though. I don't see it on 1 hour chart because this is a very strong move down, right? So there's a lot of power and the AO is very strong as well. The 4 hour is strong as well. Now, if you look at the 4 hour world, you can see that there's a potential for this to dive down and up again. There is a potential. I mean, it could break the bottom a bit and then up. It could also do this. We're getting into potential zone that we might make some not so impulsive moves as this. Something to be aware of, although I think the downside pressure will probably push it lower. But let's take a look. 15-minute world. Yes, there is divergence indeed. There was divergence between these bottoms, and that's why the currency moved up like this. That was the reason. Because of the divergence, it made that correction. Basically, the goal of divergence on that particular time frame is the long-term moving average. So whatever the time frame I use, if there's divergence, then the goal of that currency is to get back to the long-term moving average. Once it has done that, the divergence on that particular time frame is not prevalent or relevant anymore. Now, of course, if there will be 1 hour divergence, that will be a different story. Then we would expect the currency to go back to this long-term moving average. That would be its goal, but we don't have that divergence on the 1 hour chart. So that's why a break of this bottom on the 1 hour chart is very likely. So I was only looking at the 4 hour chart and made me, maybe hesitate a bit because of this correction, but still think the chances of that bottom break are very high. It's just that the breakout trade here has been missed. anyhow, back to the divergence part. Does that make sense, Richard? So basically, we had divergence here. We went back to the band, didn't get back to the continued, had a second divergence, and then made it back to the long-term moving average. Now, of course, you don't have to use this, but as long as you understand it, great, cool. So that's my rule of thumb. Let me say it this way. So otherwise, we don't know exactly where the divergence, has its effect or stops. 1 hour chart, Kiwi. Is there anything interesting? These are one of those cases where I'm not really that interested in a currency. The band is just going flat. It's still, underneath the long-term band, but you can see there's no momentum. I'm looking for preferably a trending momentum, because otherwise there's a lot of spikes up and down those bands, because there's no trend, so it's just moving from one extreme to another, but around like these moving averages. So that's why you create this kind of range. It's bouncing, if it moves away too far from the moving average, it gets rejected. It's one way of looking at it. So what do we have here? Yeah, we can analyze it, but it's really not that, not that interesting at the moment. What is SHS? Yugoslav SHS? Is it like swing high, swing low? Shoulder, head, shoulder. Yeah. Let's see. Yeah, there is indeed here. This is more like double top, maybe. Well, what I'm personally, if anything, a bit more bullish on this Kiwi, just because, we have a pretty strong aggressive move up here. But we would have to break above these tops, obviously, to really confirm that. If you look at this move up, you can see one more push up and this thing is going to flip to the upside. So still be cautious, though. I wouldn't assume that that has to necessarily happen. Swissy, same like the euro. That too had its bounce yesterday, right at the target. One way of doing it is look at this move down here, hook back, right to target. That was a good buy, right at the target. Stop loss could have been underneath this bottom, for example, here. Tight stop loss. Anyhow, we did get a bounce off this band. Same story as the euro dollar. Also here, a break of this top is very likely due to the power on the oscillator. If we then zoom into the 50-minute world, that too had a breakout right in here above the 50-minute fractal. Whenever you see a 1 hour band like this, which has a very good angle, you can then zoom into the 50-minute world and take breaks of fractals in that direction. It's a very simple way of trading. Aim for 1.5 R2R, but a very successful. Depending on from currency to currency, but some currencies have a success rate of even up to 75%. So you can imagine with the 75% accuracy some currencies have, with the 1.5 R2R, that is mega profitable. So very good technique to look at the 1 hour band. Yugoslav added also that he's looking for a break of that top indeed, as a confirmation of the double top breaking. Cool. So let's continue to see if there's anything interesting right now to trade. Let's see, dollar CAD. Dollar CAD made a pretty strong correction here. But if we look at the 4 hour chart, we haven't looked at that much yet, but we can still see the bullishness because these two tops are converging, right? There's no divergence, and price is definitely still above these moving averages. There is that bullish bias on the 4-hour chart. Plus, the oscillator has reached the zero line, so it looks like just a sustainable move to the upside. Let me say it this way. We had a breakout here, in fact. Personally, I think if you let this move go back to the band, let the band catch up here, something like that, and I think it could be a good long with the stop loss maybe here to target higher. I mean, this thing is going to move up a bit, but eventually it's going to correct back to the band. And we can put a fib on this upside, and we could even target the 105.50, which is this top, and the minus 272 target, something like that. So you got about, that's the space to the upside potentially. Approximately, we don't know exactly where, of course, yet. We don't know where the band will be in the future, and that will be the risk. Looks like a 2-to-1, yeah, 2-to-1 probably. The dollar index, well, I do look at it occasionally. I know, but I'm not trading it that specifically like some traders do. You know, they use it as a very big guideline. I wouldn't say that it's that important for my trading. I know definitely traders that use it more intensively and frequently than I do, but I do glance at it occasionally. Dollar yen. Dollar yen is yeah, well, I won't dive into the analysis part of it. You can take a look at the Elliott wave analysis maybe if you want that I provide to Admiral Markets. But let's see. I wrote the Elliott wave article assuming that this could be a wave 1 of 3, and this could be a wave 2 of 3 of 3 basically. And we have 3 of 3 of 3 of 3 remaining. But what I didn't think about, in fact, that this could be still actually a correction of this side. So let's see if we get a bounce indeed here, or we correct lower indeed before we bounce. I don't know. We'll see. Anyhow, looking at our moving averages, we're back at the long-term moving average. And on the 1-hour chart, this is a relatively deep correction, punching through the band. And I actually speculated with a small buy in here yesterday at 98.55, right in here. So yes, that was a good buy because it did respect that level, but maybe we should have took it to break even, but it didn't correct it lower, unfortunately. Let's see. So this is a relatively deep correction. Let's wait 2 more minutes and see if this is a fractal. If it is a fractal, I wouldn't mind. I think I'll take a long right above here with a stop loss just below here, trying to catch the first bounce basically to the upside, just like it did here. You see this example here on the left? Where we had an exaggerated downside maybe on the lower time frame, where price moved away from the moving averages a lot. You see that? Right, the band is here. You can use the band on all time frames. Very steep. Price is underneath that, pulling the band away, but we know that on a higher time frame, that downside is most likely a correction. So if you then wait for the first fractal break, you catch the first reversal, right? Now, unfortunately, in this case, the reversal, yeah, it was still a good trade, right? We got a 2-to-1 trade here still, but it wasn't the bigger reversal, right? It was just a retracement for one more downside. So I'm hoping that this one could be the bigger one, but let's see. So 1 more minute. And the value of the your EMAs, and they're 34. And 144. But you can use any fib number. You can use 50. I mean, I'm sure that 89, 55, and would be well as well, would work well as well. But I like these because basically because you have those spaces here that that indicates how far retracement has gone. This is I call this a shallow retracement. I call this a deep retracement, basically. And once price starts to build above it, well, then it's a reversal. So that's how I distinguish the two. So I'm going to try a long just above that. It's still definitely bearish on the short-term time frame, so I'm not sure if we'll get a break above here, but if we do, I'll take that trade. I'll try it, the small position, and try to add on if it goes my way. The spread here is about 0.7, 0.8, 0.7 pips, so that's very little. I'll personally go to 98.30. Stop loss 98.15. Take profit, I don't know at the moment. Let me think about it. Oh. Alrighty. Had those numbers wrong. Now, I don't know if that bounce is going to happen, but if it does, then I like the bouncing potential here. But if this doesn't give that bigger bounce, then maybe this, you can see the band would be already twisting like that, and it could become like that and then this. So we'll have to see how price will respond when it does get up back to this band. If there's divergence, maybe a bit. This, I mean, ooh, that's so tight that I'll pull it up even because it looks like it's equal to each other, to be honest. That's true. Maybe a tad. I mean, you're talking about a millimeter higher, right? Or less than an inch higher. So, yeah, I guess it's very close in any case. And that we have only a bit of a break here. So that is something definitely to be thinking that this could, there are definitely two scenarios where we could see this move to test this bottom, and this would be actually a bigger correction, absolutely. The other scenario is that we don't break this bottom and bounce like that. To me, it's 50-50. We're at the 618 right now, so that itself could be a bouncing spot. I don't want to take a long right in here necessarily at the 61.8, but if I do get a bounce like that, a break above here, then that's something different. The 4-hour world is a bit of a mess looking at our bands, but we do have the potential. You can see here that finally our bands have crossed, and we do have an upside angle here. Last time too, it dipped below the band, got that upside. So maybe here the same. It's possible. It's definitely possible. Look at the angle is pretty good on the 4-hour chart. Pound CAD. Jano is asking for pound CAD. Let me do that right now. So this is pound CAD. Just taking a second here to analyze it because I didn't look at it this morning. Well, pretty passive. Yeah, it did move up here to the band, and we are making this correction, but it's extending pretty far, in fact. If we put a fib on the first correction, right? We stopped at the minus 272, but then actually pushed through the minus 618. Let me take a look how many pips. About 30 pips we pushed. That's quite a lot. That's quite a lot. Still, I would still consider this a correction, obviously. And we're getting close to the long-term moving average. Let me put both of them on. There's no divergence between these bottoms. So therefore, this is quite an extended correction, because if there would be divergence, obviously this would be the target, in my opinion. Let me take a look at the 15. There's a bit of divergence here on the 5. This is just crawling up. In fact, the funny thing is you can see how price is using the band for the correction. You see that? It's fascinating. Look. Now, you might say, laugh at it, but for me personally, there's nothing more fascinating than using moving averages for trading. I know that sounds probably funny for a couple of you, but it's really interesting to see how the psychology and dynamics is so well defined by that. And you can see that the price was just way underneath this band, and then it broke above the band here. Of course it broke above here, right? But look at that, it broke above, but then here, that second break was the most important one, right? Not the first one here. And then it started to use the band as support, in fact, in this choppy upside. Then we reached the long-term moving average, but then we started to push above here. So that's why I break above this level, indicating that getting a bit more thrust. This level right here was kind of the bounce or break spot, right? Either bounce or break a bit higher. Hope that makes sense. That's also was the top of the band on the 1-hour chart. That same level on the 15, right? Anyhow, right here, right now, I would think that a break above that 1-hour support would be a good sell, either from there or a sell in here. So I'm going to, I like that. I'll put a sell right at 167, which, let's see, 166.98 maybe. But the stop loss would have to be above 167.32. Well, the closer to 167.32, obviously, the cheaper it becomes. So let me put a fib maybe. It could even reject here. That's why that's what I'm saying, like, if it either goes up higher or if it breaks below this, one of the two would be good trades. But this upside should find some rejection at sooner or later. Or at least there's a good chance, let me say it this way. So I'm still contemplating. Yeah, anywhere between 169 166.98 and 167.12 base 167.12. That 15 pip zone. You know, anywhere in there, I would say. You know, one thing is putting a pending order, but other one is just to wait maybe for. Maybe I'll just wait and see how price responds to that level. Anyhow, I'll put those lines there so that when I go back to this chart, that know that I'm looking for a short in this zone. We're getting there actually as we speak. Let's take a look at the 5-minute world. Any 5-minute wick in here could be a good selling sign. Let me take a look at the pound. Oh, we do have pound news, right, as well. Ugh. Maybe better to. Well, I don't think that the 167.32 zone should break, but pound is wacky as always. Spikes up and down. You know, we could expect anything on this pound news coming. This could push it up, and then we can see that rejection. This could, the pound news could spike this down and then fly up, and then this. You know, I really want it higher before I'm bearish. This is, to me, it's a no man's zone right now, personally. We're a pound cat. So maybe instead of pending order, because I don't trade the pound cat that often either. So obviously these concepts are usable on all time frames, but it is true that the characteristics of the currency pairs do change certain dynamics. You just can't deny it. Now, I've never really looked that intensely at the pound cat, so I wouldn't dare to tell, you know. In theory, if this would be maybe the Aussie, I would feel more comfortable taking a pending order there in general. But I mean, there's a big difference between the AUD USD and pound yen, obviously, and how the currency, of course, reacts to these moving averages. Pound yen is definitely more spiky. Right? So those things we have to take into consideration as well. All right. Let's see. What else do we have left? I think we were looking at, I don't remember. I think dollar yen we looked at for sure. Yeah, it looks like we're getting a bounce now because you can see the 1-minute world. The 1-minute world had an impulse. You know, this sounds funny, but the 1-minute world had an impulse to the band, and it's looking like it's having weakness and could make it upside now. Let's see. The first move should bring it up to 98.34. Then probably see some like this and then up again. We've got 6 candles here, not breaking this bottom, which means that I think that this impulse is probably over. Let's still wait the next 2 minutes and see how this candle finishes. All right, so pound yen. Let me take a sip of water. Alrighty. Pound yen. Well, I just mentioned the spikiness around those moving averages. You can see that this one is, I guess, one of the best examples we can have. It's not always that bad. Don't worry, but it does like to spike around the moving averages more, right? So, got to be a bit more careful maybe with using the most recent bottom, for example, with pound yen. Like in here, for example, or if you're trying to catch the continuation, you can see prices above the moving average above the moving average, etc. then maybe using this bottom would be more wise than any bottom in here, for example. Anyhow. Right now, yeah, I mean it's breaking this bottom. Looks like an ascending wedge. I guess any hook back when the moving averages start to get an angle could mean bearishness. Let's see. At the moment, it's quite uninteresting. Euro yen. Euro yen was a beauty. Right in here was a great sell that that is making me a lot of money now at the moment. Let's see. 80 pips at the moment. And the stop loss was very tight, just above this 1 hour fractal here. And the reason is, look at the power of the moving averages. Look at this first correction, which is way, way far from the moving average. And look where the target is. The target is in the moving averages, right? In the band. And that's a great thing. Those are one of the best because then the likelihood of resistance acting is very high. It did take a while here, but eventually it did break. And there could have been an extra scale in upon the 50-minute fractal break with a stop loss above it, as I was saying already earlier, right? That too is doing very well, and 1.5 to 1 was no sweat, right? Probably found here, and if you would have maybe kept it, then it would be doing even a lot better. Stop loss was maybe 20, 25, up 80 now. So that was good, but anyhow, I'm looking now at the moment. Yeah, there's nothing to trade for myself. The price has already extended away from the moving average, so I'm looking for the first break away from the moving average or a retrace to the moving average. Once price has moved away from the moving average, I'm in a waiting mode. All right. So this could still continue for a bit. Once this stops, though, there is indeed divergence, as Yugoslav is saying. And Yugoslav is also saying, what a wacky pair indeed, about the pound yen. It's good for scalping, I guess. I mean, because it moves so much up, you can look at lower time frames and catch a lot of pips, but I don't do that too often. But I can imagine it's good for scalping, let me say it this way. So yeah, then there would be divergence, and we could see retracement back to the long-term moving average and maybe continuation. Because the angle on the band is pretty strong here. So let's see. Let's see how far this goes, first of all. Odd yen. These are old lines. I don't know why they're here. Odd yen is a bit of a mixture on this time frame. Obviously, you can see they're not lined up, so I'm not too interested in this. Looking at the 1 hour chart at least. Euro odd. Well, let me zoom out just a bit. Let's see. The 1 hour world has, of course, a very steep 1 hour angle. But it recently got a correction. That correction went to the target as well and got rejected. and now it's continuing up. Let's see. So we had a lot of choppiness here, basically just a correction. A break below here could be good, with a stop loss just above the opposite 50-minute fractal for a 1.5 to 1 trade. That would be basically what I was talking about, the euro yen, for example, right? And those examples, as you remember, like those breakout trade ideas that already have materialized, that would be the same as this one, right? Because here we got the bounce, and the first breakout will be this one. So let's see. Let's see if we can break this bottom. We'll go back in a second. All right, that probably wraps it up, I guess, from the moving averages. Let's see. Euro New Zealand, interesting though, is that you can see the wave at a very, very, very strong angle here. And indeed, getting rejection there. If you put a fib on this first upside, guess where it stopped? Minus 272 target. Got rejected there. And is moving downwards already. Classical example of a strong moving average here. And that short, in fact, already happened as well below these. So there was a sell, and break below these bottoms was a sell with the stop loss there, and you obviously probably already had your 1.5 to 1, in fact, or maybe here. The stop loss here, I mean. So a 22 pip stop loss, maybe 25. Target would be 37. Yeah, the take profit was already reached here, in fact. Something like that could be remaining on the euro odd. That was a classical trending trade. Alrighty. Any particular currency I missed? Maybe I'm looking at the stats, and a lot of people left, so maybe the moving averages are not that interesting. But I find it fascinating. But I guess many don't share that passion. At least Yugoslav. Good. Happy about that. Let's see. But in fact, I think that I'm surprised that so many left. But I think that for me, these are actually like the most juiciest details you can ever get, because you know it's for me it's these, maybe people don't like the way that it's maybe too discretionary, looking at angles of waves maybe, and how the impulse. Yeah, that's true. Yeah, no. Who knows? Doesn't matter. I will take a look at the question from Sami. When does the 4-hour bar close? At 12 and 16 and 12. Yeah, indeed. This 4-hour bar just started, indeed. Correct. Got engulfing 4-hour twins. And it looks like we're pushing to break this bottom as we speak, in fact. Let's see, another question. Okay, Brian. Brian is asking which indicators and settings for this moving average trading. If there's an article or advanced webinar, let's see. Let me check if we have any scheduled webinar, in fact. I thought we had it lined up, a webinar about moving averages. Let me take a look. Let's see. Yeah, we do, moving averages, on the 26th of November. So 26th November, folks, Thursday. No, that's not a Thursday. That's a Tuesday. Sorry, 26th. The reason why usually we have educational webinars Toronto and I together on Thursday, but that's on a Tuesday because the 28th is Thanksgiving, and I'm not from the U.S., but I took the opportunity with the slower market to take kind of like 2 days off for myself. So that's why. So it's Tuesday the 26th. Can you make it, Brian, that day? Well, we have a recording in any case. Okay, so I think that's best to, I'll present my part there. We did look at the odd group. We can take a look again. Oh, let's take a look at the pound CAD. How's that doing? Struggling. Odd USD. Odd USD, we're looking at rejection here yesterday. Got a good downside, hooked back to the moving averages. Looks like we can see a continuation. But what I'm looking for on the 5 is something, maybe I'm looking at too complicated, but or the 15 at least. Let me do it this way. Yeah, a break here with the stop loss here could already be a good trade, in fact. Or maybe we get one more push up and then downside, right? That's possible. Something like this. Looking at the 5-minute world, maybe I should have attempted a short actually upon the break of this fractal. We did have the AO back to the zero line, but didn't think about it. Looking at the 1 hour world, we have a engulfing twin here, in fact. So probably a break of that high is not that likely anymore, but you never know. But probably not more than 12 pips anyhow. We won't break that, probably more than that. I need a stop loss around 03, 95.03 should be safe, I would say. Even if it were to go to the minus 272 target like this, the 95.03 is safe. This target is at 94.94. Any hook back here, though, definitely has a chance of seeing some downside. But it's, yeah, we're already a bit vulnerable, maybe a bit more vulnerable than here when we had the first break. I always like the first break the most because the second break definitely could work, but you're always more vulnerable to potential retracement and then actually trading it when it does that, just at the moment that it does that. So that's always a bit of a danger there. So let me take one more glance at everything, and then we'll take a look at how to place those fib targets, and then we'll wrap it up, I guess. Euro dollar still pushing through. Pound, will it correct higher? That would be a good short if it does. Euro pound has already extended away. Odd USD was a good short from here or the first break. Now maybe some continuation. Let's see. Kiwi. I would be cautious with the Kiwi, but if it does break below this trend line, maybe for example, right, like this, that's not even a good trend line. Forget it. Forget that idea. Basically, taking a look if it's possible to break above this top, all right, or otherwise maybe below this bottom. But until then, definitely in the waiting mode. Dollar Swiss is getting a bounce up. Dollar CAD, if it hooks back, could be good upside, as we discussed earlier. Same for the Swissy, in fact, I would say. Dollar yen, waiting for a break of this 500 fractal. Oh, the target on the dollar yen. Let's see. Well, I'll move it to, personally, I'll move it to break even if it gets around 98.50. Probably, or at least trail stop it with the 50-minute world, at least that. Yeah, it's 98.50 could be a target place, in fact. 98.50 could represent already a target. But that's just a one-to-one trade. Depends if this is really a retracement. You can see looking at the 1 hour chart, did get maybe some bullishness there, maybe. In any case, if we target 98.50, that's a safe take profit. If you want to be more ambitious, then I would be aiming for, yeah. Let's see. If this is the turn, doing a big if, I could be even aiming for 99.40. That's not probably a high probability. It's a good R2R though. 6-1. No more. 7-1. Let's try it. Or I'll try it. Pound yen, nothing. Euro yen, bearish, moving. Euro odd. Let's see if it's able to break this bottom. That could be a good short with a stop loss above the opposite fractal at the moment. That would be that. and the pound CAD is pushing up to that area. So let's see if it gets any rejection here, then I would be interested. Let's see if it does so. The Fibos, yes. Let's take a look at that. So basically, well, you could put a fib. What I recommend is just using fractals because that's of course clear. If you just use the most recent fractal from top to bottom or from bottom to top, always from past to future, right? So from past to future, or at least that's how Toronto and I do it. You're always safe. Now, of course, obviously, this small fib doesn't have any meaning because the bottom got broken. So in some cases, you know that wouldn't be too useful, and you would maybe be more safer with using the entire move up, right? As you can see, because that was at 38.2. So in some cases, using the most immediate fractal to fractal is good. In some cases, it's better to use the entire move, right? Entire move. And then you can, for that entire move, you can use the oscillator to see what is a move. See, this is one move here. This is one move. This is a move. This is one move, right? So that's just general fibs. Now, oh, the target setup. Oh, sorry. Oh, that's placing the Fibonacci targets. Yeah. So what you can do is once you get a first correction like this, you can put that same fib from top to bottom or for uptrend, and see where the correction could end. Right. Usually those targets are bouncing spots, but you have to be careful. Not always. Look here, it stopped at the 7.2, stopped at the 6.18, but then still moved on lower. Right. So obviously your stop loss cannot be just one pip below that target. It's not that precise. But in some cases, it does give a very good idea when the currency could bounce for continuation to the upside with the trend. Sorry. Here's a recent pound-dollar example that we took last week, right? Or I took. I'm not. No one, or one was it? Yugoslav joined me, I think. But in any case, the idea was to put it from the top to bottom. Bottom to top, sorry, and sell the 618 target, right? So that was a fib from bottom to top for the correction where the target is to sell within that trend continuation. So that's how you can place those fib targets. That's how you can place the fibs. But maybe the question is different. Go to insert indicators. No, go to insert Fibonacci retracement. Then, when you have the Fibonacci retracement tool, click on Fibo properties, go to Fibo levels, then click on add, and then click minus figures for those targets. That's how I do it. Especially the minus 0.618 and the minus 0.272. So last but not least, a question for you. Is this something that you find interesting and you would like to see more often? Or do you like other styles of trading more, just out of curiosity? No, I don't, in fact. How do I do that, Richard? I've seen that before, indeed. That's true, but Shift and dollar and percentage, but they don't work. Space. Oh, that doesn't work either. Oh, at the same time, maybe? Shift minus, not with the minus, right? Do I do the percentage or the dollar? Try to get my Fibo to have targets, to have price as well. So let's see. Not sure how to do it as yet, but would be cool. So Richard, is it space or shift, and is it with percentage or the dollar? I tried various combinations here, but so space first. Okay. In the meantime, Gary likes the variety of styles. Okay, cool. Yeah, that's why I will never only focus on this, because I can see that. I know the difference between how many people stay on normally and how many people stayed on today, and this one was not a popular topic. I can see the difference, but that's okay. At least I'm glad that a few of you liked it. If I trade harmonics, yeah, if it catches my eye, I would, take it into an extra, take it into consideration that could be playing out. Yeah, but it's not something I was always be looking for, because to me they're just fib numbers and fib patterns, basically fib number patterns. So if I see a bull flag, I'll definitely use it. Same style with the harmonics in a way, but they'll probably less aggressively than with bear flags or bull flags. So for me personally, I use moving averages, fibs, and breakouts. And for breakouts, I use trend lines and moving averages. Those are my primary tools. And then analysis is patterns, chart patterns, and wave patterns primarily. And once in a while these harmonic patterns. So that's would be my core focus. Trying to catch a retracement in a trend, and the first breakout is usually what I prefer. So that's why I thought, for me, this was my preferred way of viewing the charts. Let's take a look at how to put the numbers on. Hold shift and hit percentage, and then do the same for okay. So you're supposed to hold shift, then hit percentage, and then do the same for dollar. Strange. But space first. So space first, then shift, then percentage, then dollar. It's complicated. Space first. No, I don't manage. Well, thank you so much, Richard, for trying at least. But I have to do the fib properties. Enter the script. I thought I was supposed to hit the key and oh, I was way off. I thought I was supposed to hit the key and okay. In the description. Space after the level. And then percentage dollar. Cool. All right. So thank you so much. So for those of you who don't know that either, in the fib level, at the description, behind the description, space percentage dollar. Yeah, and then for all the levels. Cool. I took a while, but thanks for your patience. And thanks for explaining that. You know, I was I was hitting these percentages and these dollar figures multiple times on this key. Like, why doesn't it work? I'm not the most technical. Alrighty, folks. Yeah, thank you to Yugoslav, and thank you all for being here, in fact. And, well, alrighty, folks. So wish you all great trading today, and talk to you soon. Cheers, everyone.
For your